Did you know some of the best stocks show up when the market is falling? We've found two this week, plus an excellent ETFs. Let's check out this week's session right now. What we're going to do now is we're going to get out and start talking about our stock picks. Before I jump over there, though, I just want to take a real quick sneak peek over here at a couple of charts. One, I love this chart. It is very predictive, and it is basically the percentage of stocks above their 20-day moving average. And as you can see, it has fallen out of the sky this past week. When does it become interesting to me? When it gets down to approximately below the 35 level. And we're not there yet, but it's in that 35 to 15 or below level that oftentimes indicates that's when the market reverses for at least a tradable and profitable move. That's one. Number two is Investor Business Daily has modified their big picture, and instead of having market incorrection, market uptrend under pressure, or market in uptrend, they've replaced it with the stock market exposure list. And this is a suggestion, but it's something to pay attention to, is that basically if it's up here in the dark green, they're suggesting that you could be 80 to 100% invested, 60 to 80% if it's here, moves down to here. I think this would probably be the middle one, 40 to 60 would be the uptrend under pressure, and then it drops below that. I have really never seen IBD suggestions you should never be invested. I've seen it said that you should be careful about buying, but in your memory, have you seen anything where it said not be invested, Anil?
No, I don't recall.
Okay. Yeah, I don't either. Anyway, I just wanted to share that with you really quickly. Let's jump over. And stock number one is DOCU. So, Anil, what can you tell us about
One
DOC?
has a strong, very strong fundamentals. It has pulled back quite a bit with recent pullback, and I'm thinking about getting it if it comes back to the 8-day moving average. Right now, I'm not going to touch it. It's number one on my list if it comes back to the 8-day line.
You mean for the daily? I'm showing the 8 lines up here.
Yeah,
Okay, so you want to see it break out above that.
yeah.
Okay, cool. I like that. And yeah, I just would throw a fib on here just to get an idea of how it's so interesting. Yeah, it's right at the 618 retracement. And that's applying that old rule of Charles Dow. What he noticed back in the late 1800s is that stocks after a big hard run up or run down would typically retrace about 30 to 60% of the preceding move. So my stock for today is Palo Alto Networks. So Palo Alto Networks, I'm getting a pullback into the breakout area where it broke out, and also the midsection of this big green candle here. It could drop a little bit further down to the 267 level. It is also in a situation where my weekly TSIs and weekly momentum looks like it's shifting down, so we may pull a little bit deeper. I'm going to basically, on this one, wait to trade it until I get my TSI here on the daily chart crossing back to the upside. I have a 2-line cluster that happened yesterday. And so my rule is anything between 1 and 4 days after that, I could expect a reversal. I will put an alert right at the 50-day moving average of 280. And just as a full disclosure, this is a stock that is on the AutoPilot Trading Premium members list when we actually bought into it right about this level. As a matter of fact, I think it filled today as it come down and tested this area here. One of the things you may look at, you may say, hey, I'm going to go ahead and take a trade on this now. How far away is the 50? As you can see, the 50 is only 1.7% away. And so you've got a long ways to go before you hit the 5% level, which is almost down to the previous breakout area. So if you want to nibble a little bit now, I would probably reduce my position size and not maybe do a full position, but this is what I have on Palo Alto Networks. What's your thoughts on this one, Anil?
Actually, on the daily one, it has a sell signal since yesterday,
Okay.
which is fine with the pullbacks and everything. Both MACD and RSI are gone, but on the weekly, it is still intact.
Okay.
So if I would trade that out, I would at least see the MACD on the daily reverse, and then I might be interested.
Okay. And so the other thing I like about this one is, again, over here, I have a 2-line cluster on the weekly, and that can also be a powerful indication that once we basically get a reversal signal, that would be the opportunity to get back in. That's what I've got on the stock. So now it's time for face to face. Today, we have a very simple question. Well, it's actually quite a complex question. Is with the market doing its correction, today, Anil and I are going to tackle the topic of what are some of the steps you can do to prepare for a market correction. I'll let you go first.
Yeah, interesting you mentioned Lee Tanner a few minutes ago. I basically trying to go towards what Lee is doing, and that is stay invested, but make sure my rules are well thought out
Yes.
and let the rules protect me. And the other thing I'm trying to do, and I think I picked it up from you, is when it goes in correction, maybe go on a half a position.
Yeah.
So those are the two things because market's going to do what it's going to do. And
Okay.
Lee says he wants to be fully invested because you don't know when it's really going to turn. And when it turns, he wants to be in there. I think that's the right strategy.
Yeah, I agree with Lee. Lee's a longtime friend, and I agree with that philosophy. What can you do to prepare for a market correction is basically, I think, if you will evaluate multiple time frame charts, in other words, at least weekly and daily, you'll see things coming earlier because they'll start to lose their power and kind of fall off. Talking about the indexes primarily. So that's one. On the stocks that I own, again, I agree wholeheartedly. Follow your rules. Your rules are meant to get you into the trade when you're supposed to get in. So it's buy when you should buy and sell when you should sell, which is very critical. And the third thing I do is if the market is in correction and or leaning towards correction, I reduce the size of my purchases. I'll reduce it to a half size, at least, sometimes even a quarter size. Because as Lee says, the best performing stocks are the first come out of a correction or come out of a bear market. They're the first ones to come out. So if you're watching a good stable of strong stocks, then you want to be engaged with some of them because they'll pull your results for the year up dramatically. Just a reminder, guys, if you find today's session valuable and you're ready to take charge of your trading journey, hit the subscribe button below and turn on your notifications. Join our community of traders who are on the path to financial and lifestyle freedom. Yes, thanks, Neil. Great topic.
Thank you.
We've got one more. And Neil and I were both saying that, yeah, it was a challenging week finding individual stocks. So rather than go to look for individual stocks, I decided I'm going to do a leverage ETF. Now I'm doing the leverage ETF and looking at the inverse of the biotechs. Now, biotechs have run up here really hard. They look like they are ready for a pullback. As you can see, TSI on the weekly chart all the way up at the high. The daily TSI, look at this wonderful amount of, as it's making these new highs here, TSI has turned over and making divergence to the downside, similar to what's happening over here on the market forecast. Hasn't dropped below the 80 line yet on the market forecast. So with that said, any type of a retest back up into this area here, again, that's sell off, rally attempt. If the rally attempt fails, which means it gets up here and stalls out and rolls over, I want to be looking at trading the leverage inverse ETF, LABD. Check out the weekly charts over here, the midsection of the candlestick, because this is where the buyers were coming in. You have two buy candles. a hammer, I would be looking at put an alert probably at $9.30. If a person was aggressive, they could put in a buy at about 912, 915. I would want to make sure that level was within 5 to 6% of the lows there, which that would be. Just make sure that I'm not giving away the farm. And on this particular situation, because it's a inverse leverage ETF, I do a half position. Anil, that's my picks for this week.
All right, looking good. On the triple screen on LABD, the MACD is reversing and coming back up.
Okay.
Let's see, that's a good thing. Weekly, of course, has a sell signal.
Sell
on it.
signal. Yep. Without a doubt. And why would we even be entertaining this? If we take a position here, and let's say we got in approximately here, even if we just get a halfway move back up, 50% retracement, that's 66%, guys. So that's something that we're going to get all that 66%. Probably not. But if we can even get 25% of it or 20% of it, that's a nice gain and helps with the compounding through the year. If you found today's session valuable and ready to supercharge your trading routine for 2024, take action now. There'll be some playlist and some videos that'll pop up here shortly. And so take a look at those, help you basically build your pathway to financial lifestyle freedom. Remember, you're in control, and we're here to support you in every step of the way. So stay focused and make 2024 your year for trading triumph. Aloha. God bless everybody. Hey, folks, just a reminder that all the materials that we do present are for training purposes. Traders should always paper trade any new method prior to the risk of their personal capital. Past performance is not an indication nor a promise of future performance. The other advice that goes along with that is trade the chart that's in front of you.